We'll check the markets here on this very big day. Carl said a little bit of a leg lower in the last few moments. We are red across the board, led lower by today the Dow and the Russell, but it is a momentous day for this market. Is it, in fact, as some are calling it, a make or break day for stocks?
It is more important right now than it certainly was 24 hours ago. And I think the reason for that is this rise, the uncomfortable rise that we're seeing in energy. You have gasoline once again, the first 5 contract months, all at a 52-week high. The price of spot WTI up near $107. So yes, that places a higher degree of emphasis on the ability for these Mag 7 companies to deliver tonight. What do I like about the market? I like the fact that the semis bounce back. We'll talk a little bit more about some of the names like NXPI that are contributing to that recovery today. But I do think it's about the Mag 7. We have Amazon, we have Alphabet, once again recording.
Microsoft.
Well, you have Amazon and you have Alphabet once again recording 52-week highs today.
Yep.
I think that's important. But overall, as we get to the other side of this, I think the Mag 7 will deliver.
Well, they have to, Carrie, deliver. I mean, you know what the Nasdaq's up over the last month, right?
20%.
Like a little less, like almost 18.
Yeah.
Right. So the stocks have roared back. They've helped the S&P roar back to a new record high. We're off that by a little bit, but not much.
No.
So now, given the comeback, they better meet the moment.
Oh, exactly. And part of what's so important today is what we heard from OpenAI, or we heard from the Wall Street Journal about OpenAI and how there are concerns about their revenue growth. And if their revenue growth is weaker than expected, you're going to start to hear that in terms of cloud storage. And these companies are going to have to talk about what they expect to be spending, how much they're going to need, how big of a play this continues,
Sure.
and the usage of all of these chatbots.
We're going to get to we'll get to the specifics of what is most front and center today for all these companies in a moment. But I want to stay on the idea of what many on the street today, because I got the notes in front of me, are saying a make or break for stocks. These reports today, given they're coming all, for the most part, at once, throw Apple in tomorrow and NVIDIA's down the road a little bit, but this is a very significant moment for this market.
Yeah, and how many times have we seen a Fed meeting not matter, right? So that doesn't matter. So what matters is what happens after 4 o'clock today, and that's going to be critical. Now, what happens if it's King Solomon Day and you have some that are good and some that were bad? So what does the market focus on? Is the market in moving to a risk-off situation and they accentuate the ones that miss? I don't know, but it is. It's going to be so interesting tonight. And look, I'm positioned to anything in front of it. The ones that I own, I'm happy with. If they get dislocated tonight, then that's fine. I have a little room to buy with some cash. But the other interesting thing is what happened with OpenAI that you mentioned. Now, if that were a public company and if the competitors were public companies, you'd be able to read through and say, is that happening at Anthropic? We don't know. My suspicion is that Anthropic and Google, Alphabet, have picked up share. And that's why they're not meeting their targets. I think that's evident in all the conversations you have.
Right.
So the read-through yesterday, that hit the market, I'm not sure that's a big deal, but it's going to be just a hell of an evening, and tomorrow morning it's just going to spill over.
Yeah, Malcolm, there's a report, one report saying that 80 seconds of big tech earnings will decide the stock market's fate. Do you agree with that assessment of what's going to happen in overtime tonight?
I think that is a great characterization. I think that it's interesting that coincidentally, the 4 companies planning to spend the most CapEx related to AI infrastructure this year are all reporting within 80 seconds of each other. So it is very much a make or break moment for the markets this afternoon. Joe, I thought, was taking us in the right direction with the setup where he mentioned the last 24 hours and what has changed in the last 24 hours. And Carrie caught it. It's really the overhang of OpenAI. It's the fact that we now have fresh questions related to OpenAI and whether they're going to be able to actually meet those spending commitments, where, if you remember, it was in October where we started to have questions and doubts about whether they could actually make good on those $1.4 trillion worth of spending commitments that sent the tech trade downward anyway. And now, as we're starting to get on a high, get on a good foot, the tech trade now could unravel all over again in the shadow of this. So the Wall Street Journal picked the perfect time, I say that sarcastically, to release that report.
Yeah, so there's so much anticipation in the air. And as I mentioned, we'll come back to this in just a moment. I want to clear the decks, though, so to speak, on this final Fed meeting of Chair Powell's tenure, because Steve Liesman doesn't have a whole bunch of time before he has to get ready to go in the room, and he's figuring out exactly what questions that he wants to ask the chair. So, Steve, it's nice to have you as always. No policy moves are going to happen today, barring some unforeseen thing, and we don't really expect that. There are big questions, though, and we will want answers to: does the chair stay after his term ends? Does he clear the decks completely for Warsh? What hand does he leave the new chair? And how will history judge his tenure, his stewardship of the Fed? I think those are the key outcomes that we'll all be looking for today, right?
I think those are three great questions, and I think all of them in some sense will be asked in one way or another at the press conference. And I think some of them bear on the future. So was it Steve Weiss who said it's all boring? Tell him to go get a cup of coffee and come back in a minute. So here's the thing. The first thing is, does he stay or does he go? What's important about that is if he goes, the president will have a majority on the Federal Reserve Board of Governors and another vote potentially inside of the FOMC. So that's important there. And I think there's a couple of things that he'll be weighing whether or not he wants to stay until for example, the Supreme Court rules on the Cook case. Does he wait for the IG report? Does he wait until the successor is named, likely going to be Stephen Myron, or the Department of Justice appeal deadline on the subpoena case? The other question is whether the Fed makes a move towards a more neutral standpoint, where the idea that the next move could be a hike or it could be a cut. Right now, the Fed is kind of leaning towards a cut, but with the high inflation we've had on the price spike, I think there are some members of the committee who want a more balanced statement. And then you look at the outlook for the Fed. What's been remarkable to me, Scott, is look at that extended period of time there, all the way out to July 2027, and we can't even get to a 50% probability of a rate hike under a chair who said he wants to cut rates. Rate cut under a chair who says he wants to cut rates.
You know, it's interesting. I asked Jim Bullard, the former St. Louis Fed president, yesterday when he was on Closing Bell with me, what grade he would give the Fed chair, and he wasn't willing to go there, acknowledging the pluses and the minuses along the route, if you will. I'm curious as to how you think history will judge Powell, somebody who really guided the Fed through a once in 100-year health crisis, the tariffs, the highest inflation in some 40 years, an unprecedented level of personal attacks and attacks on the institution itself. You could say he dealt with all that magically, but there is the knock of the getting transitory wrong. There's the knock of buying mortgage bonds for too long. There's the knock of waiting too long to hike rates that will sort of take a few notches down on the grading. Do you agree with that?
I do. And the question is how much you want to, what kind of curve you want to put on the grade, Scott, right? A lot of Fed Chair Powell's tenure happened under President Trump. And he withstood really withering criticism and a level of public admonishment that has never been seen before. And he mostly kept his mouth shut. So I'd probably give him an A on politesse, perhaps. That would be the first thing. The second thing is it's a big question of how you want to tell the history of the pandemic. There is a version of the pandemic that is told by Powell's critics where the pandemic doesn't exist, where there is no invasion of Ukraine by Russia and no price spike in oil. That version grades Powell very poorly. Another version that takes that into account gives him a somewhat better grade. He was late to the party, but how late and when he might have moved and would it have mattered is another question. So there's a more, is an easier way to grade Powell and a harder way. I think his critics are too tough and maybe his supporters are too easy on him. That will be a big factor. But overall, I think he delivered relatively low inflation, relatively good growth and low unemployment over the balance of his tenure, with the big question about how we debate and discuss his performance in the pandemic.
Which we will continue, I think, to do. And I'll look forward to seeing you outside the room, Steve, when you join me later on, 3 o'clock, when the chair is done and I'm in the midst of the conversation with Jeffrey Gundlach. I look forward to speaking with you, and we all look forward to hearing your question to the chair after 2:30 p.m. once the news conference does begin. That's Steve Liesman. We don't need to debate here, I don't think, the tenure of Chair Powell, because I really want to get back to, I think, what matters a whole heck of a lot to our viewers today. That's the earnings that are coming. We I think, broad brushed it, right, in terms of the companies themselves. We looked at the market impact. Let's talk specifically about some of these companies. Let's begin with Amazon, okay? AI monetization is going to be front and center for everybody, along with the AI spend. AWS growth rate, will it meet the moment? What will they say about the Trainium chip business, which has been on fire? They're expected to reiterate their $200 billion spend. It's the most on record. Does that change? I don't know. What are you most looking for with Amazon, Care?
Yeah, I think it's the growth in AWS. So people are expecting 28% for the quarter. It'll be great if it's 30%. If they raise the year I think is 36%, maybe up toward 40%. They've been on fire. The stock has been fantastic. We're looking at growth. The number should be 163 for the quarter, hopefully higher than that. But it's more important about what they're saying on the storage business and how that's moving.
Stock's up 27.5% month to date. So Malcolm, given the roar back that many of these names have had, how does that influence the context of how you'll judge this tonight?
Yeah, so I actually think Amazon is the one that I'm most sure that Amazon is going to have a positive, the street is going to have a positive reaction after Amazon reports. Yes, it has run up considerably. Yes, we do expect 28% growth, and they'll probably give us exactly that. But I think there's an opportunity to tell a story around Trainium that we haven't really locked in just yet. So the street did respond last quarter when they told us that they had positive performance, and they actually could now turn themselves into an AI chip business if they wanted to, and really start to turn these things, turn this on. And so I think that's really where the guidance story is going to go. That's probably where Amazon shares start to take off again from here if we do get a strong guidance related to their chips.